Hello, everyone. Welcome to Technical Analysis Workshop with Nimbus Capital. So today we'll be doing something a little bit different. In our previous technical analysis workshop, we look at a particular chart, we look at a specific counter, and we make analysis on that counter to see what is it doing, whether is it tradable. But for this one, I'm going to discuss something in general. I'm going to discuss a particular topic in general, and I'll be using the S&P 500 as an example. So what is the topic that we will be discussing today? It is very simple. I'm going to teach you, share with you the easiest, the most efficient, and the highest winning rate strategy out there that any trader can ever use. It sounds like a very big thing, that's something that I should be charging maybe $3,000 for, like my course, but it is something that is easy to understand in terms of the theory. But of course, theory are always theory. When you try to go out there and execute, right, it is slightly harder. It's not as easy lah. That's why my course is to help you with the execution, not teach you with the strategy, not teach you regarding the strategy. I can give you every single strategy for free, but you probably will not be able to execute it properly, and then you end up hurting yourself more than it actually helps you lah. But for this session, I'll be sharing you this very simple strategy, and that is the simplest strategy of all. If you remember this pyramid, we have discussed that the first order of priority is we need to look at the trend, always trade with the trend. Only when you got the trend, right, you start to look at things like chart structure and candle, but we always look at the trend first, and that is the strategy. Follow the trend. Do not trade counter trend. Do not try to be a hero. You don't get bonus point for bottom picking any counter. Always trade with the trend. So that's something very easy to just say, but unlike most courses or other workshop out there, right, I'm not just going to blindly say follow the trend, follow the trend. No, I'm going to walk you through the entire journey, the details on why following the trend is extremely important. And if you build a trade setup based on the uptrend, you will find that trading become extremely easy, extremely stress-free, and it doesn't rely on any prediction. It doesn't rely on any kind of weird, complicated analysis that you are not even equipped to do. You simply just buy the trend and you are good to go. So let's walk in to more details regarding why follow the trend. Following the trend is most important. And in Nimbus Capital, right, we do things by statistical method, meaning when we enter a trade, when we enter a trade, right, we don't just like take the profit and then we pat ourselves on the back and say, wow, good job, nice, good trade. But what we do is we also look at things in a statistical manner, meaning we need to analyze if this trade can be replicated, is this strategy can be repeated over and over and over while still getting profit. Because a lot of time, trader make a trade and then he wins something, he made a profit, and sometimes that profit is what I will consider something as toxic profit. It is a topic that deserves a video on its own, but I will think about making a video on it sometime in the future. But what is essentially a toxic profit? A toxic profit is you doing something that you're not supposed to be doing, and then you got a profit. For example, you risk way more than you should be. So instead of taking 2% risk on the trade, you went YOLO and you take like 20% trade, or you put your entire capital inside this particular trade and you got a profit from it, and you will be led to think that what you are doing is actually correct. And because of that, you are encouraged to keep repeating this same trade over and over. But the thing is, your trade is not consistent. That trade cannot be repeated over many times and give you the same result. So perhaps your trade have a 20% winning rate, just so happen that what you have gotten profit on just happen to be that 20%, and you are actually going to be losing 80% of the time, meaning your profit trade can't really be replicated. So when we are trading, right, we need to always look at it from that perspective. Can my strategy be replicated over and over and over and still get the same level of profit? Okay, always keep that in the back of your head. So now let's talk about more in detail about the trend itself and why following the trend is very crucial. Here I have S&P 500 chart with me. You can see here that this is no doubt definitely an uptrend. Nobody can argue that S&P 500 is in an uptrend. But sometime a year ago when COVID-19 struck, the S&P 500 did lose over 30%. We lose about 35% of our price before it start to recover. But the thing is that if we draw a line across the COVID-19 height, and the moment when markets start to recover beyond that post-COVID price, and we kind of check the increment, right? We actually have gotten back that amount that we are currently up by 35% since the pre-COVID, after the post-COVID price. But of course, if you want to count all the way from the bottom, right, S&P already recover more than 100%. But let's be realistic. Nobody can catch the bottom. It's not that there's no analysis out there that can catch the bottom. Okay, so first, let's assume that the S&P 500 is only in uptrend after the price went above the pre-COVID level. So we are looking at the price above the green color line. So previously, the pre-COVID high was 3384. So we recover to 3384 sometime in 18th of August 2020, like that. And beyond that, the S&P 500 just continue to go up and up. So if we look at the height, and if we look at the retracement during this uptrend that we are seeing here, right? Let's take a look at it. So from our August high, S&P retraced 10%. And at this point here, it retraced 9%. How about here? 5%, 6%, 5%, and 6%. So you can see that during this uptrend, from the very moment S&P crosses the pre-COVID price and it goes into an uptrend, the price of the S&P does not retrace more than 10%. So think about it. What does it mean? Really sit down and truly think about what does this information means to you. I'll give you about like 10 seconds to like digest a bit, okay? All right, okay, so what does it mean? It means that if you place a long position at the worst possible moment, meaning right here, this is the point where you can like place your buy order at the worst possible moment. The worst you are getting is a 10% retracement. Anywhere along the way, right? Anywhere along the way, meaning aside from this point, aside from this little point, which is a 10% retracement, if you bought anywhere along the way, just draw a random line across this chart. If you bought anywhere else aside from this one single day, the retracement that you need to be able to hold is actually less than 10%, because that's the highest point where it dropped to the lowest. So meaning, if I can deduce what is the highest amount of retracement threshold that I need to be able to hold, the moment I can deduce that number, right, I can actually just simply take a long position and then enjoy the ride. In this case here, the retracement was 10%. 10% was the highest retracement it ever gotten. Meaning, if I place a trade with 11% stop loss, and I can place it anywhere along this uptrend, I will be getting a profit regardless. All I need to do is I need to be able to hold the position. Now let's look at it from another point, because a lot of traders like to short at the top, which is something that I do not get. I have no idea why traders do that, mainly because it is a gambler fallacy. Like, oh, this one have gone up high enough, it should come down. The coin have flipped enough tail, it should become head. The sick ball table have like thrown the dice like 10 big in a row, it's time that it should hit small. The roulette table have land enough red, it should start to hit black. That's the gamble fallacy. And in trading, right, gambler fallacy can cost you a lot of money. So do not ever short the top. And right here, let's look back at the same scenario again. If you are trying to short the top, the best profit you can get is 10%. Any other time, right, you will not get more than 10%. And getting the 10%, it assumes that you are shorting at the top and you are exiting at the bottom. So this has two very big assumptions, extremely big assumption. You need to be super duper accurate. You short at the top and then you exit right at the bottom. Only then you can get the 10%. But wait, there's even more. You can only get that 10% if you happen to manage to short at this one single window, this little single window that you see here. Any other time you short, right, you are not going to get 10%. You'll probably get like 5%, 6%. And you need to ask yourself, is that worth it? Is that worth it? Because if you place a long position along the way, right, anytime from August until now, you can place it anywhere along the, you can place a long position anywhere, you will be able to get more than 10%, except maybe like right now, except maybe during this period. Okay, maybe from here onwards. Okay, so let's say from 4,200 onwards, you will not be able to get any, you will be getting less than 10%, because from here onwards, you'll probably be getting like 9%, because if you buy here and even at the current price, right, it is like less than 10%. So, but the thing is, if you place a long position anywhere below this line, anywhere, you will be getting at least 10%. Anyway, look at all the points that you are able to get that 10% profit compared to that one point, that single win, like 1 day or window where you can only get a 10% drop. And that is not worth it. Folks, that is not worth it. Please do not short at the top. I beg you, do not short at the top. It's not worth it. The windows of opportunity is not worth it. So the key thing here is, if you can determine what is the retracement threshold and you place your stop loss slightly outside of that retracement threshold and you make a buy position, you don't even need to exit at that right moment to get your maximum return. You can keep holding and it can go up to like 10%, 12%, 13%, 14%. You can keep holding as much as the market takes you, meaning your TP no longer become a concern because you are following the trend. As you follow the trend, right, market is going to go up and up and up. And TP is no longer a concern to you. But when you try to counter trend trade, short at the top and cover at the bottom, right, then the exit point is very crucial, because if you miss the exit, then you are in a danger of the trend taking you out, and you are in the danger of not getting your maximum profit. And even if you get maximum profit, there's only one single point where you can enter to get that maximum profit. But every other point, if you place a long position, you can get way higher than what you could have if you have short without even worrying anything, without the need for such surgical precision of enter and exit strategy. So that is the critical thing. And that's why here in Nimbus Capital, our main concern when we are trying to trade is not trying to predict this one lah, that one lah, this fundamental analysis, the market trend, this, and we don't write like 10,000 words grandmother essay. We only find one thing. There's only one thing that we are concerned with. Sorry, actually two. There's only two things that we are concerned with. Number one is the trend is up. Sorry, three things. So, my bad. Okay, sorry. Three things, confirm chop. Guarantee chop, three things only. Okay, so jokes aside, number one, is the trend up? Am I trading with the trend? Number two, what is the threshold of the retracement? If I can find the maximum threshold and my stop loss is outside that threshold window, then no matter how much the market retrace, I am still in the trade and I just simply ride the trend to as far as it can go. I don't even need to worry about the profit level. Number three, it is also important that we cannot chase too high. So there's an upper limit. We cannot chase too high, because if we chase too high, right, we will not be able to place our stop loss outside the threshold without risking too much. So that there is a risk management portion coming into play. So once I got these three numbers, three criteria, then we can simply enter the trade without all sorts of funny analysis where trader pretend to be expert in things that they are not even expert in. So suddenly all the trader become pharmaceutical expert when suddenly become vaccine expert. Then during Brexit period, all the traders suddenly become Brexit expert. It's amazing how like all these traders so knowledgeable, extremely knowledgeable. Like even some trader even know Apple more than Tim Cook knows Apple. Is like really ridiculous. That's not what we are trying to be. That's not what you as a trader to be. Because traders, right, we are going to be trading across all industry. We can be trading oil and gas, we can be trading tech, we can be trading automobile, we can be trading bank. So there's no way for you to be like all-knowing in all these kind of industry, and you don't need to. Just keep it very simple. Okay, so if you look at all the big trades that we ever gotten, all the big trades that Nimbus Capital ever gotten, look at Propnex. Look at this. Look at this amazing trend. And if you spot all the threshold, right, this is simply just buy and hold. It's like once the trend is established here, right, you can simply buy and hold, and you are like it's free money for you. For example, at this point, let me zoom in because it's slightly harder to see. At this point, market retraced 7%. At this point, market retraced 4%. At this point, market retraced 4%. At this point, market retraced 10%. How about here? Market retraced 8%. So what does it mean? It means that I can enter any point here, any point, and as long as I set my stop loss at least like 11-12%, I can get the entire thing. I can get this entire trade easy peasy. Don't even need to worry. Don't even need to worry about anything at all, simply because I'm following the trend. I'm looking at how the price retraces, because if a particular stock or if a particular index start to retrace, right, most of the time it will be plus minus, always retrace that period until we reach the point where it is like way at the top and it just dive all the way down. Then we know that, okay, the trend has ended. So union gas is actually such situation. But by the time we hit this point, right, we have gotten so much profit from here already that once it hit here, we just take that loss on the final trade. But we have so much profit from all this beginning here. And it totally removed the need for you to time your profit and actually even time your entry. You don't even need to time your entry. You can just enter like anywhere along the way and you'll be fine. So if we look at counters such as Propnex, look at the trend. Very nice. If we look at Grand Venture, look at the trend. Extremely nice. If we look at Hourglass, look at it. It's like perfect setup for trading. Look at NVIDIA, even for NVIDIA. If we look at the very first stage that we entered somewhere along here, our entry was at this point. I believe this is the point where we have the highest drop. We dropped about 14%. But I think anytime after that, it was less than 40%. Yeah, it was less than 14%. So if you look back at the stop loss that we actually have here, is more than 13%. We were able to correctly guess where the threshold was. We was correctly able to get where was the retracement threshold. We placed our stop loss outside of that threshold, and easy peasy, we get this entire trend, and now we are extremely profitable. And if you look at all this trade, right, they are all uptrends. None of the trade that we ever like have big profit, right, are downtrend counters. Yes, we do trade downtrend counter time to time, and in fact, our hit rate on even downtrend counters are quite, I would say, accurate, reputable. For example, counters such as Rex International, Golden Energy, we do get them, but these are like short-term, more speculative trade. But the biggest profit that we ever had, those trades that we have over 4 or 5 consecutive trades, right, are all uptrend counters. Even Frankel, I even forgot about Frankel. Frankel actually had one of the most beautiful trade setup like Hourglass. So that's why trade the trend is very easy. Make it easy on yourself. So now let's come to the second part. Why do traders do not like to buy the top? Why do traders hate or like not hate? I will not say hate. Most new traders, they are misguided. Misguided. I think that's the least offensive term that I can use. If not, people will start like getting very go or Karen on me. So yeah, misguided. A lot of new traders are extremely misguided. Number one, due to the gambler fallacy. Because they feel that, oh, go up long enough already, it should have come down. Yes, it will come down. But if it come down, let it come down. And if it does not go beyond the threshold that you find, then it will keep going up. So just let it be. That's why your stop loss is there. Okay. Just take the trade. But I think the second most common issue, which I kind of more of like speculation, it never really happened to me, but I think this is the issue with most traders out there, is that when they buy something, right, when they enter a trade like this, what they want to see is they want to see it go immediately up. Like they want to see immediate green. Like the moment you buy, you want to see, oh, okay, this position like 马上 green 了, immediately green 了, plus price immediately go up 了. They cannot handle situation where they buy ready and then price come down and then they are in that rate for like maybe 1 or 2 weeks or even 1 month. They cannot handle that. They want to be immediately green. And this is the biggest reason why traders lose money. It's very ironic. The fact that they need to always see green in their open position is the biggest reason why traders lose money. That is why they always do funny thing, like they try to short the top because they feel that if they get the top and price immediately go down, right, then their open position will be always green. But the consequence is that if you short the top and it start to go down, right, it's not going to go down by more than like 4%, 5%. And what for are you scalping that 4 or 5% in an uptrend counter is totally ridiculous. As we discussed in S&P 500 just now, right? Let me reiterate again. Like the only time where you will be able to get a 10% profit on an S&P short is if you trade here, But the key thing is that you only have that one window. If you trade any other time, right, you are going to be getting lesser than 10%. But the thing is, if you have gone for long position at any other time than this particular moment, you could have got that 10% or even more. So it's extremely ironic. So now another issue is trader will say, oh, what if I kena situation like this? What if I kena situation like this? Like the whole thing went down by more than like 34%. Then if I have a long position, right, then I'll be losing money already, then how? So if that's the case, right, that's why our stop loss is there. If we ever encounter a situation that this whole thing went down, right, then our stop loss is there to take us out, and you will only lose that one time. And then that's it. But the key thing is, if you look at the entire uptrend from, let's say, 2019 all the way until here, once again, there's only one window where you could have gotten a long position and you will get that 30% drop, and that is only one time. That one time if you get caught here. But any other time, you are going to be getting profit by the long position. So in this one time that, let's say by some miracle, you are able to short at the top and you get the profit at the bottom, right? Yes, true, you will be able to get a very nice profit with a very nice risk-reward ratio, but the window is extremely small for you. Meaning, if you short any other moment, if you short here, you are not going to get this much. Meaning your winning rate, right? Your winning rate will decrease tremendously. Your winning rate will be like, by shorting at the top, your winning rate is going to decrease so much that it's not worth the risk-reward ratio. It's not worth this one moment. That's why when we are trying to look at trade, we look at expectancy. We don't just look at the risk-reward ratio. So if you get 1/20, if your risk-reward ratio is 1/20, but you can only get this trade one time out of like 100 times, right? Then your 1/20 is not really worth it, because the window is so small that if you miss the window, right, then you might not even be getting 1/20. But what if you are able to get 1/5 in like every other time? If you go for a long position, go for the long-term uptrend, right, you can get that risk reward 1/5 like the other 99% of the time, and more often than not, that is what going to be giving you the biggest amount of profit. So once again, right, I want to emphasize, always trade with the trend. Never bottom pick. Do not short at the top. Trade with the trend. Figure out where the threshold is. Put your stop loss below that threshold and just hold. You'll be fine. You'll definitely get a lot of profit. If you don't know how to find where the threshold is, come for my course. Okay, come for my course. We'll teach you. And it's one of the most important lesson in our trading course. We teach you where to put your stop loss and where this threshold is, where this magical threshold is. This is your entry. Your stop loss is your entry. If you can find the threshold, by all means go and chung that counter already. But if you don't know how to find your threshold, you are doing anything like I don't know, like all the funny thing that traders do, right? Then what you always be experiencing is volatile result that you cannot control. Sometimes you win, sometimes you lose, you don't know what's going on. Like you try all kinds of analysis, you try volume profile, Elliott wave, Dongchan channel, never seems to be able to get consistent result. And that's why, that's the main reason why, because you're not following the trend. So just follow the trend. It's as simple as that. Okay, so this is the biggest advice that I can give you. Hopefully it helps you out in your trading. And if you find this video helps you, do help me out by subscribing to this YouTube channel. Of course, if you want to come for the course, if you want to look at all our exclusive product, our exclusive services and videos and trade ideas, right? You can subscribe to our Patreon channel, which is it's a paid subscription, but we do a lot of weekly webinars, market update, trade ideas with all the threshold levels that I'm talking about is picked up for you already. So you can come for that. But if you just want the free videos, just free content, if you enjoy this, right, do give our YouTube channels a subscribe, because it does help out. It does help out in the sense that if we get more views, right, we are able to create more videos like this in the future. Okay, so stay safe trading, and thanks everyone for tuning to this video. Have a good day.